Our team presents San Diego County CAFR. My name is Mertat and I briefly talk about San Diego County economy and its audited financial statements. San Diego County is one of the 27 counties in California. A board of supervisors sets priorities for the county and oversees most county departments and programs and approves their budgets. The county provides a full range of public services to residents, businesses, and tourists, including law enforcement, detention and correction, emergency response services, health sanitations, park and recreations, library, and roads. The county also serves a delivery channel for many state services, such as foster care, public health care, and elections. These services are provided by 5 business groups: Public Safety, the Health and Human Service Agency, Land Use and Environment, Community Services, and Financial General Government. MGO CPAs is the independent CPA firm who audited San Diego County financial statement for the fiscal year ending June 30, 2013. The firm has audited the government activities, the business type activities, the discretely component units, each major funds, and aggregated remaining fund information. The first 5 commissions of San Diego County and the discretely presented component unit were audited by other CPAs and furnished to MGO. Although the auditors neither did express an opinion nor provided any assurance on the supplementary information and the statistical information due to limited procedures and limited sufficient evidence, they believe San Diego County financial statements has been presented fairly in all material aspects. They also tested internal control for testing compliances with law, regulations, contracts, and grant agreements. As I mentioned before, the Board of Supervisors of County sets the priority for the county, oversees most of the departments, and sets the budgets. California Gross State Products, GSP, fell more steeply than the US GDP during the recession, but it has outpaced the nation's growth in 2012 and 13. The county's economic base consists of energy storage, cybersecurity, and clean tech, tourist industry, defense-related presence, biotech hubs, and telecommunication also contribute to San Diego County economy. The County General Management System, GMS, is the framework that helps the county managements to operate and deliver services to residents, business, and visitors. The GMS identifies how the county set goals, prioritize the use of resources, and prioritize the use of resources. All and each county program support at least one of the following 3 strategic initiatives: safety communities, sustainable environments, and healthy families. The Government Finance Officer Association of the US and Canada has awarded Certificate of Achievement for Excellence in Financial Reporting to San Diego County to its CAFR report for the fiscal year ended June 30, 2013. The government-wide activities include government activities and business type activities. The government activities include general government, public protection, public ways and facilities, health and sanitation, public assistance, education, recreation and cultural, and interest. The County of San Diego uses fund accounting to ensure compliances with the finance-related legal requirement. The county's governmental funds include General Fund, Public Safety and Special Revenue Fund, Tobacco Endowment Special Revenue Fund, other governmental fund. The proprietary fund include enterprise funds, internal service funds. And finally, the fiduciary fund consists of pooled investment or investment trust fund, private purpose trust fund, and agency funds. Now I pass the presentation to Andrew.
Thank you, Merda. The government prepared statement has in compliance with the GASB financial reporting model. The statement of activities appears on 2 pages. The most costly governmental function or program operated by the government is the public protection. Over $937 million of the costs of governmental activities were borne by taxpayers in the form of general revenues. The entity increased its governmental activities unrestricted net position this year by $217 million. However, the entity decreased its business type activities this year by $1.6 million. In the revenue section, most important sources of general fund revenues are taxes, aid from the state government, aid from the federal government. Most important source for general fund is taxes. However, the aids from the state and the federal government are significant. For public safety fund is the aid from state government. Tobacco endowment fund is the revenue from the use of money and property. And the other governmental fund is the aid from the federal government. The reporting entity depends on a single source for as much as 31.5%, which is the aid from the state government. The property tax of San Diego is above 14% of the total revenue. The Note 1 has included a section to indicate recognition criteria for primary revenue sources. In Table 4, in the statistical section, contain information that show the changes over time in reliance on each revenue source. The expenditure section has 3 largest categories of general fund expenditures, which are public protection, public assistance, and health and sanitation. The public protection, tobacco settlement, and the public safety are the largest categories of expenditures of general fund, tobacco endowment fund, and the public safety fund. Table 4 presented in the statistical section of the CAFR are showing the trend of general fund expenditures by category for a period of 10 years. And the expenditure data is related to the financial measures. There are some other financing sources which reported in a separate section of the settlement of revenue, expenditures, and change in balances, such as sale of capital asset, transfer in and transfer out. The line item indicates the nature of each financial source or use. The government presents budgetary comparisons as a basic governmental fund financial statement. The budget comparison title is a schedule rather than a statement. It presents the original budget and the final amendment budget, the actual data used in the budgetary basis of accounting. The government has not presented one or more variance column in this report. Budgetary reporting practice has been prepared on a GAAP basis. Now I would like to pass to Monica.
Thank you, Andrew. We will now be taking a closer look at the balance sheets of both the government-wide financial statements and fund financial statements, going through an analysis of one of the major assets of San Diego County. In this slide, we can see as the arrow points where the assets of the county are most concentrated. It is in the cash and investments, in the receivables, and in the capital assets. We will be taking a closer look at what makes up the capital assets, since it makes up about $3 billion of the total assets. In the notes to the basic financial statements, there is a breakdown of the non-depreciable and depreciable assets. A bulk of the amount is concentrated at the depreciable assets, made up of mainly buildings and improvements and road infrastructure. According to the MD&A, San Diego County uses these assets to provide service to the citizens, and these assets are not available for future spending. For fiscal year 2013, $50 million of the assets went to Women's Detention Facility in Santee, $30 million went to the maintenance of the county's buildings and roads, $30 million went to buying equipment, $20 million went to the construction of the Registrar of Voters building, and another $20 million came from the infrastructure donated by developers. Right next to Table 13 is Table 17, which breaks down the source of the county's capital commitments. These are considered encumbrances, in which they are not current expenditures or liabilities, but will be in the future. It is important for us to take a look and consider it, since there is possible cash outflow in the future years. As for sales of assets, when a capital asset is sold, it will be captured in the statement of revenue, expenditures, and changes in fund balances. For fiscal year 2013, the majority was part of Special Revenue Fund, composing of about $6 million. The county has capital leases for equipment with a book value of $173 million, which is capitalized in the Facilities Management Internal Service Fund Statement of Net Position. As the table shows, the county will be paying the lease until 2018, enabling us to understand its future obligations. Last but not least, we will be taking a closer look at the Capital Projects Fund, since it reflects upon or is the source of a huge part of the capital assets that were disclosed in the government-wide financial statements. For a fund that is relatively big, there is not as much disclosed as we would like. It is part of the non-major governmental fund and therefore disclosed in the supplementary information in the last part of the annual report. As the table shows, its main financing sources comes from a transfer of about $108 million, and for fiscal year 2013, it had a deficiency of $170 million. Mainly, expenditures went into capital outlay. However, the CAFR does not have a clear breakdown of the capital outlay for us to understand. Now that we have taken a closer look at what makes up part of the assets in the financial statement of financial position, we'll be examining the debt or liability next with Ali Reza.
Thank you, Monica. Hi everyone, my name is Ali Reza and I'll be specifically discussing about the financial liabilities of the county. Do you know how many people live in the county of San Diego? Does this county have any significant liabilities? Well, 3,150,000 people live in the beautiful county of San Diego, and the county had outstanding long-term liabilities of $0.202 billion at the close of fiscal year 2013. That means, on average, every person who lives in the San Diego County had outstanding long-term liabilities of $698,000 besides their own personal liabilities. Is this good or bad? To answer this question, we need to analyze what is reported by the Auditor and Controller's Office and compare that with the economic reality of the county. In general, having liabilities is not necessarily a bad thing. Sometimes there is a need for immediate cash flow. For example, during the 2007 and 2009 recession, the San Diego County, just like many other counties in Southern California, shared the pain of recession and experienced decline in revenue. Some of the reasons for this decline were the crash of housing market, loss of jobs, especially government jobs, and loss of sales tax. Under these circumstances, the county had to somehow generate enough cash flow to cover the expenditures and lift the economy for years to come. So as long as at least accountability and transparency exist, borrowing money can be helpful. The other example has to do with short-term obligations. The county issues tax anticipation notes ahead of property tax collections and deposits the proceeds in the general fund. These notes are absolutely necessary to fund the county's annual cash flow needs. The borrowing, in fact, allows the county to have access to capital, but it also increases the risk. The risk must be properly managed so the county can best serve the stakeholders. Now let's take a closer look at some of the county's financial statements and see whether the county has been able to reduce its liabilities, especially long-term liabilities. As an indicator, if we look at the changes in long-term liabilities statement, we realize that for governmental activities, long-term liabilities and other liabilities decreased by $24.5 million and $50.2 million respectively. Also for business type activities, the liabilities reduced by $264,000. So on June 30th, 2013, the county's outstanding long-term liabilities ended up to be around $2.02 billion. The principal debt issuance for $1.74 billion of this amount included $405 million in certificates of participation and lease revenue bonds, $771 million in taxable pension obligation bonds, and $564 million in tobacco settlement asset-backed bonds. Another useful indicator to evaluate the financial position of the county is the analysis of the net position statement. As you know, general long-term liabilities are not reported as liabilities in government funds, but are reported in the government activities column in the government-wide statement of net position. The government-wide analysis of net position indicates that assets exceeded liabilities by $4.24 billion at the close of fiscal year 2013, which is an increase of $214.9 million or 5.1% over fiscal year 2012. This included an increase of approximately $120 million in the county's restricted and unrestricted net position, and also an increase of $95 million in net investment in capital assets, which is alone a 3% increase over fiscal year 2012. Therefore, the county is making progress in managing financial risks, and its ability to meet long-term obligations has improved. Now I'd like to pass it on to Peter.
Thank you, Alireza. Different from private sectors, traditionally governments use a different set of financial statements due to the different end users. The fund-based financial statement, which focus more on current financial resources and current expenditures, to have more physical accountability. In order to provide such information, the accounting basis is set as modified accrual, which is between cash basis and accrual accounting basis. With the implementation of GASP 34, governments are now required to provide an additional set of financial statement, the government-wide financial statement, for the following reason: to provide access to the finance of the government, including the year's operating results, to determine whether the government's overall financial position improved or not. To evaluate whether the government's current year's revenue was sufficient to pay for current year's services. To see the cost of providing service to its citizens. To see how the government finances its program, do user fees and other program revenues versus general tax revenues. To understand the extent to which the government has invested in the capital assets, including roads, bridges, and other infrastructure assets, and to make better comparison between different governments. Accounting differences between two sets of financial statements. First, revenue should be recognized when accrued under the government-wide statement, while only the revenue that have impact on current financial resources are recorded in the fund-based financial statement. Expenses are recognized using the same rule. However, under the fund-based statements, depreciation expense and amortization expense are not recognized. Also, fiduciary funds are included in the government-wide financial statement. Other differences include the treatment with capital assets transactions and non-spendable inventories. As you can see in the table, we are reconciling from the governmental fund statements of revenues, expenditure, and changes in fund balance to the government-wide statement of activities. For the revenues, we need to add back the earned but not yet collected and the revenue that do not provide current financial resources. And then we need to adjust the restricted inventories, which are not included in the government-wide statements. The next one is the capital assets related depreciation expense that was reported as expenditure under the fund-based statement, but should be allocated over the useful life of the assets as depreciation or amortization expenses under the government-wide statement. Also, the capital assets related transactions should be recorded under accrual basis, which resulted in the increase in net position. Similar to capital assets, the premiums and discounts of issuance of long-term debt should be amortized. In addition, expenses that do not require current financial resources but are occurred should be added back. The last is the internal service fund that charges internal service, which should have no net effect on government as whole. Therefore, should be added back. The final one is, that's how we get to the final change in net position. Okay. Overall, for the fiscal year ended June 2013, the San Diego County government was able to have a surplus of $240 million with a net position of $4.2 billion. Therefore, we believe the financial position and performance of the county government is relatively strong. To conclude our presentation, San Diego County has the ability to pay back their long-term debt and a strong current financial position. Thus, their sustainability in the near future is sound. Thank you.